Hi guys, and welcome back to the channel. Today I'm going to be showing you how you can find the best ETF for you, explain you the important numbers you need to look for when choosing your ETF, and I'm going to run you through my favorite ETF and explain you why I chose that particular one. Well, 2022 certainly didn't kick off too well, or as we hoped it would be. Pretty much all markets and asset classes dropped, from stocks to crypto to ETFs, everything was down and in the red. Interestingly enough, if we look at ETFs and we choose a particular index, in this case the S&P 500, it actually dropped much less than so many other stocks or crypto did. The blue line is tracking our S&P 500. I added Facebook, Meta, which was actually corrected massively in recent times. Also added PayPal in here and Bitcoin, just to kind of have the crypto point of view. So interestingly enough, if I change it to year to date, so that's since the beginning of the year basically, you can see here the S&P 500 only dropped by 5.6%, which is still a drop, but significantly less than some of the others. Bitcoin, for example, dropped by almost 20% since the beginning of the year. Then we have here in pink, we have Facebook or Meta dropped by 30% in just the first 5 weeks of the year. And then PayPal, such an established stock, dropped a massive 34% since the beginning of the year. So you can see everything dropped, but actually the index, the S&P 500, dropped significantly less. The good old S&P 500 outperforms so many other asset classes, and best of all, you don't actually have to do much. You just have to choose the right ETF and then dollar cost average every single month a regular amount into it, and over time you will benefit from compound growth. And that's exactly the appeal of ETFs. So my favorite website that I use to research my ETFs, it's called JustETF.com. It's very simple to use. Even you have some top ETF recommendations here right away. If you don't want to do your own research, what are the best ETFs depending on what you're looking for, etc. But definitely a very user-friendly tool to use. So I'm going to go onto the ETF screener because this really helps you to filter down the ETFs you're looking for. And then just click over here on search ETFs. And yes, at first it can be a little bit overwhelming, and that's why I want to run you through it and explain you some of the main numbers and indicators you need to understand. So when you go on the screener, you can see all the ETFs. Currently they're having 1,414. So that's quite a choice of ETFs that are out there. There are probably even more, but these are some of the most popular in the world out there currently. So obviously a lot to go through if you go one by one. So what I always recommend, first start with what kind of index do you want to mimic, right? Because essentially an ETF mimics an index or a basket of stocks, bonds, or even cryptos in the future. So you need to think, what kind of index do I want to follow? Do I want to follow the American S&P 500, the biggest 500 companies in the US? Or do I want to have a more diversified portfolio? If you've been watching this channel, you know that personally I really love the S&P 500. So having identified which of the indexes you want to track, it's very simple. You go over here on matching indexes, and then you can see a whole array of various indexes from around the world. You can go to Dow Jones, you can have the DAX, which is the German 30 biggest companies. You have the Bloomberg different indexes, and even at the S&P 500, you have various different ones, but I want to have the S&P 500. And then you can see there's really only 15 ETFs presented to me now, so it's much more concise and easy for me to understand, but still quite a lot of numbers to deal with. So I think we can really filter this down further. And again, it might depend on the index you choose. There might be more or less. The next one is the use of profit. So there's two things you need to ask yourself. Do you want an accumulating ETF? So that's basically an ETF that pays regular dividends. So those dividends can be paid monthly, quarterly, annually, depends on the ETF you choose. Every time you get a dividend, it automatically reinvests and buys more shares of the particular ETF. On the flip side though, you have the distributing ETF. So that means every time a dividend is paid, it is actually paid to you. And you can then choose to yourself reinvest, or you can actually use that money and pay for your living expenses. So it's something you have to answer yourself. There are two factors in deciding for that. One is taxation. So it depends. Some countries, they tax accumulating and distributing differently. But a lot of countries, actually, they don't make a difference, because even if it's automatically reinvested, you're still going to be taxed on that. So there isn't really any differentiation. The second thing is, if you're early on and just starting to grow your ETF, it really makes sense to have it accumulating, because then you can faster compound and grow your portfolio. If one day you actually plan to live off the dividends from your ETF, then it makes sense to have a distributing one, because then it's actually paid to you and you can pay for your day-to-day expenses. And that's why I actually chose the distributing one, because I want to be in control what I do with these dividends. I can either reinvest, buy something else from it, or pay for my day-to-day living expenses. So we're going to click here on distributing. And then you can see there's only 8 ETFs left. And then one more thing I would like to recommend is the fund size, because that's very important. You don't want to invest into an ETF that's smaller than 100 million. It still sounds like a lot of money, but actually it means it's much less liquid, less people investing in it. So if ever you want to buy or sell, there's going to be a bigger spread. You're going to get most likely a worse price when you buy or sell. And secondly, if there's lack of liquidity, but one day you actually have a big position in it, there may not be enough people willing to sell their shares. So in this case, you're going to be stuck with your own shares in that ETF. So I always recommend go for larger than 500 million. So now we're down to 6 ETFs. And then one more important thing that I personally think it's extremely important is the replication method, because an ETF is obviously replicating an index. Because you can't directly buy an index, you're replicating it. So there are 3 different things. There's full replication, so that means the stock provider actually buys exactly the stocks as they are in the index and replicates it 1-to-1. And that's for me the always preferred option, because if anything fails, the stocks are actually there, so they can liquidate them and pay out their shareholders. Then there's sampling, which means it's slightly reduced the physical holding, so they don't hold 1-to-1. And then there's swap based, so that's kind of when they buy derivative and other things. I don't like it because I don't really understand it, and it's hard to see exactly how many of which stocks they're holding. So I much prefer the full replication, because whatever stocks they should be owning, they are actually owning physically. So I'm going to click on this over here, and there you see now we're only left with 3 ETFs. So from 1,414 possible ETFs, we're now down to 3. Again, in terms of charts, they're all pretty much following the same trend line because they're all based on the S&P 500. The fund is based in USD, but you will see in a second they actually have different currencies also. The fund size is very important. Then the TER is the expense ratio. That's very important because none of them are charity organizations. They obviously want to make money from it. So the lower this is, the better for you. Looking at those 3, HSBC, Spider and Vanguard. As you know, I love Vanguard. It's one of the biggest money managers in the world. When we go, for example, back into Yahoo Finance, into Apple, you can click here onto holders, and you can see the top institutional holders in the world, the most valuable company in the world. 7.7% is held by Vanguard. So Vanguard is actually the biggest holder of Apple stock in the world, closely followed by BlackRock and then Berkshire Hathaway. So once again, that gives me confidence that they know what they're doing. So once I made my decision, I'm happy with this, I'm gonna click onto Vanguard S&P 500. So first of all, you have the full name, what it is. You have the ISIN number, so that, depending on which broker you use, might be relevant or not. Then you have the ticker number, and I'll show you in a second, there's even more descriptions on different exchanges, but in general it's called VUSA, VUSA, and that's the ticker symbol for the particular ETF. So then you have a brief overview over here. It quotes me now in pounds, obviously, as I'm under the UK, but depending which country you're coming from, this will change accordingly. But then we can go down, see once again here, the expense ratio, 0.07% per annum, which is fantastic. The fund size we spoke about, replication, physical replication. Strategy risk is obviously based on long-term investing. Fund currencies, the main fund is registered in US dollars, but again, I'll show you in a second, there are different currency alternatives, and you can see the volatility over here. Obviously with the last few months it has been a bit more volatile, but other than that, it's been really going up nicely over the years. This particular ETF was first listed in 2012, so almost 10 years of historic data, and that's also important because a lot of new ETFs promise you crazy returns, but then again, they've only been operating for 1 or 2 years. So 10 years is definitely much more of a long track record that you can trust. With regards to dividends, as we selected before, it's distributing, it's quarterly paid, so that's great. And it's domiciled in Ireland, because for non-US citizens and Europeans in particular, we cannot buy directly US-based ETFs, because otherwise I would be buying the VOO, which is the Vanguard S&P 500 stock, but this is the ones for non-US citizens basically. You can click on show more over here if you want even more insights, taxation status, replication method, even who's the revising company, KPMG. So a lot of details, which makes it so much more transparent, and that's why I really appreciate them. Over here we can see the performance over the years. Let me change this to euros, and then you can see here really how it developed nicely. Since 3 years you would have had a return of 75%, and that's again the power of long-term compounding. Here you can see the exposure, and this is really nice to see. You can really see the top 10 holdings that you would be having by investing into that particular ETF. So you would hold a majority of Apple, then of course Microsoft, Amazon, Google, Alphabet, Tesla. So that's the beauty of investing in an ETF, that you naturally invest into so many other fantastic companies that you would have to otherwise buy individually. And the great thing is, even if one of those drops, like we've seen recently with Facebook, that doesn't impact your total portfolio because so many other stocks increased. And that's why I love buying an ETF, because I wouldn't know which one of those drops and which one increases. So buying that, I kind of have a more rounded return over time. You can see here, of course, the country risk, majority invested into US, of course. You can see the sectors over here that you're investing in. It just kind of breaks it down of the companies. So majority of it is obviously technology, but also nice that you invest into healthcare, consumer discretionary, financial. So it's again a nice balance between different sectors. Then you have some more documents that you can go to, and it's really good to see the fact sheet actually if you click on this. So this is the last fact sheet from the year-end closing. You can see here the key facts, and that's really nice because you can really see where this particular ETF is actually listed. So VUSA is the ticker symbol of that ETF, and then the ending after that identifies which exact stock market you're buying, and that means also which currency you're buying in. So when you go into your stockbroker of choice, I use interactive brokers. I'm just going to copy that particular number in here, copy, paste, look for it, and then I find exactly that stock in that currency and the location that I want. And once again, it just kind of highlights what we've seen already before on JustETF. The performance over the years. You can see here once again the top holdings, once again the weighted exposure to various markets and sectors. So really great overview of what you need to know. So going down over here, you can see once again different performance over the years, and just gives you a snapshot, the returns of the particular ETF since the inception. So that's really nice. A quick little heat map over there. The dividends that have been paid out over the years. As my ETFs continues to grow over time, that ETF really becomes more relevant. In the beginning, it's just a few cents, right? But over time, as it accumulates, it definitely continues to grow and will start being a substantial amount every quarter. And then here, once again, the listing of where that ETF is listed. Once you've seen this and you're happy with it, just go over to your broker, copy that code from here, make sure you buy the right one, double, triple check, because you don't want to end up buying the wrong one that, for example, accumulates rather than distributes dividends. So make sure you choose the right one and then use the right ticker symbol. In this video over here, I'm going to show you on interactive brokers how easy it is to buy your first ETF. If you enjoyed the video, I really appreciate it if you give it a like and subscribe to the channel. It really helps the channel a lot. Stay healthy and get wealthy, and I'll see you in the next one. Ciao, ciao.